Welcome back everyone to another update on the Robinhood portfolio. And as some of you who have seen these updates in the past know that I tend to do these when the market is doing really well, simply because it's a lot more fun seeing the portfolio reach its all-time highs. The S&P 500 is up about 24% this year, which is actually, to me, kind of interesting because we are having an election very soon here. And in my opinion, I think that in times like this, there tends to be a lot more volatility in the market. So I'm predicting that there will most likely be some type of pullback within the next few months, but I could also be wrong and there might just be smooth sailing until the end of the year. With that being said, my own portfolio is at its all-time high, currently valued at $119,000 with a year-to-date return of right around 30% and a one-year return of just under 40%. And again, keep in mind that the market currently is at its all-time high, which of course drives those gains in my own portfolio because some of my biggest holdings are also some of the top holdings in the S&P 500. And if I'm being honest, my portfolio is pretty boring because I am a long-term buy and hold investor with quite a few just boring companies in my portfolio. I don't do too much trading either unless, of course, I notice that a stock is very undervalued. Then I might make a swing trade using a reasonable amount of margin. For example, I recently bought more shares of Google because its share price broke into the 140 range and its PE ratio was around, I think, 17 or 17 and a half. So I bought more shares of Google and I will be watching it over the next few months. And if it potentially climbs back up to its all-time high, I might sell a couple of those shares and move the profits into other long-term holdings in the portfolio. So that's about the extent of any trading that I do in this portfolio and about as much risk as I'm willing to take on. So with all that being said, let's move into the biggest holding in the portfolio, which is Nvidia at 177 shares, or about 16% of the portfolio. Now, Nvidia has been probably the number one driving factor for all the growth that we've had this year for not only my own portfolio, but also the overall market in general. And I've owned Nvidia for over a year now, but I didn't start buying more heavily into the stock until about halfway into this year. So my average cost isn't very low, but I still have a decent return, as you can see, of around 26%. And I'm still planning on buying and holding Nvidia for at least the next couple of years, but my buying in general for any stock has been very minimal as of recently, just because of how high the market is. But regardless, I'm still holding on to stocks like Nvidia going into 2025 and beyond. Number two is Microsoft. And compared to a lot of other tech companies, Microsoft actually hasn't had that amazing of a year. Its year-to-date return is only at 11.2%, which is still respectable, but again, compared to other tech companies, it's actually kind of lagging behind a little in terms of growth. Of course, we can't complain though, because it still has a positive year-to-date return, and my total return is now about 15%, or around $2,000 for this position. Which brings me to the third largest position in the portfolio, Broadcom, which makes up 8.3% in weighting. And its returns have been very similar to Nvidia's as of recently, since they're both fairly comparable companies and in the same sector. It's up nearly 66% this year to date, with a one-year return of around 107%. So this company just continues to compound year over year and is getting so big that it's nearing that $1 trillion market cap. It's essentially a semiconductor powerhouse. Next, we have Apple at about 8.3% as well, with just under a 30% total return. And Apple has actually been performing a little bit better than Microsoft this year, but even though Apple has still been growing pretty consistently, I'm actually a little bit more bullish on Microsoft. So I've been buying more shares of Microsoft and mostly just been holding my shares of Apple. And I also will be holding these shares going into 2025 as well. Next is Arthur J. Gallagher, a very large insurance company that also just continues to compound year over year. It's another one that just doesn't really seem to be slowing down. I've been buying into this company for a couple of years now and plan on continuing to do so because as much as I hate paying for insurance because of how expensive it is, I do know that insurance companies like this one are very profitable with really high margins and produce a lot of cash. So I am still very bullish on insurance companies, and you'll notice that I do hold other companies in the portfolio that are very similar to Arthur J. Gallagher. Next, we have KLA, another very large semiconductor company that I've been dollar cost averaging into, so my total return is not too crazy, but it's still just under 9%, or a gain of over $500. The next one is Cintas, one of my favorite classic, boring yet profitable companies that I've been buying and holding for a couple of years now. So my total return on this position is just under 50%, or a gain of $2,000. Again, nothing too exciting about this company, but still every year continues to create consistent cash flow and compounds at a healthy rate. Moving on, we have Google that I was just talking about earlier at 4% of the portfolio, and a nice little gain of 11.2%, or around $600 so far. Now we have Costco that I haven't really been buying too heavily into, because I do think, although it's an amazing high quality company, it is still fairly overvalued at a PE ratio of just under 54. So it's a company that I am planning on holding for the long term, but I typically try not to buy it when it's this high, but I do still try to buy a little bit on the dips. The next two are companies in the financials or insurance sector. It's both Berkshire Hathaway at 3.4% and Progressive at around 3% as well. They're both high quality businesses that have seen pretty incredible growth over the past year or so, leaving me again in that spot where I don't want to buy too many shares right now, but mostly just kind of hold and kind of see what the stock price and evaluations do going forward. Now, moving on, I want to talk a little bit about a few positions that I recently added to the portfolio, and then a position that I've actually had for a long time now, but I'm considering selling out of for a few different reasons. So this recent position that I added is Eli Lilly, an extremely large healthcare company that develops and distributes pharmaceutical products. And one of the reasons why I added this position is mainly because I didn't have any healthcare companies in the portfolio and wanted a little bit more diversification that way. So Eli Lilly currently makes up 2% of the portfolio with a small gain of 3.35%. And despite all of the growth that it's recently seen and how big of a company it is, I do think there is still some room to grow. So I am planning on holding this company for at least the next 2 to 5 years, kind of that medium term time frame. And the last one I wanted to talk about is one that I'm actually planning on completely selling out of over the next month or so, and that is Petrobras. And I know that it's one that I've had for quite some time now, and I've even made entire videos on this position, so it is kind of sad to see it go. But I've been trying to switch my focus solely on growth stocks and growth ETFs, rather than dividend and income producing equities. So it only makes sense to sell out of this position and kind of spread out the profits into other stocks that I'm planning on buying more of. I've also been trying to consolidate a little bit more, so I'm not stretching myself too thin. So I recently have gone from over 45 different holdings now down to around 36. And for me personally, that range from 30 to 40 different holdings is right in my sweet spot and manageable for someone like myself. So let me know what you guys think of my Robinhood portfolio, and I will see you for the next video.